Hey everyone, welcome to the Osiris Trading SMT Masterclass. So, in a nutshell, if you're not using these or using them properly, you're missing one of the best confluences you can have in your trading model. So what's important is SMTs form all the time, so it's very important for them to be read in context and aligned with time. When this is done properly, it's a confluence that is extremely strong and will strengthen the win rate of any model that utilizes them. So this presentation is tailored for XAUUSD, but the concepts can be applied to all other trading assets also. So what we will cover today: what is an SMT, aligning SMTs with time and highest probability SMTs, forming the correct narrative, situations to look for SMT, best method to use to assist detection. We'll run through some textbook live examples of a valid SMT, and I'll also run through some examples where it's invalid. So without further ado, let's jump straight in. Definition of an SMT. SMT stands for Smart Money Technique, often called Smart Money Divergence in ICT concepts. So essentially what it is it's a signature left in price action of smart money or big fish getting involved. The size of the transactions being made is enough to throw them out of sync. So essentially what you get is when two assets that normally move together, correlated pairs, they should be making similar highs and lows. If one makes a higher high, but the other fails to make a higher high, that's an SMT divergence. So here we have an illustration of what an SMT looks like against a correlated asset. So on the left we have XAUUSD, on the right we have XAGUSD. As can be seen, XAUUSD is engaged the high time frame point of interest. It's made a higher low, whereas XAG's made a lower low and swept that previous low, and then formed an SMR and displaced higher. So that's what we like to see. Correlated assets, gold or XAUUSD. So this is all the assets that gold correlates to that you want to be looking for SMTs in your setups. So DXY essentially has a strong inverse correlation, confirms the US driven moves versus true gold strength. XAGUSD or silver has a strong positive correlation and it detects internal commodity divergence. XAUEUR, so this is gold versus euro strength and it separates US dollar effect from real gold demand. So the highest probability SMT, which is what we want to see, is you want to see a liquidity sweep on XAUUSD, which is also time aligned into a key point of interest. An SMT then forms versus DXY, silver or XAU euro, and then you get displacement, which confirms the SMT is valid and develops into an SMR. Noting, if XAUUSD moves but XAU euro doesn't confirm, move is likely currency driven, not true gold strength. So here we have a clean SMT correlation matrix, which is perfect for the gold and indices traders. So you have all the assets linked together, what they are, and is a good reference guide when you're looking for SMTs. If I'm trading indices, generally I'm trading XAUUSD more than anything else, but indices is great for the first hour of New York, gives clean setups. I'm usually looking at either NASDAQ or US 30, depending on what looks stronger. So aligning SMTs with time for highest probability SMTs. So really just scratching the surface with what I'm going to present here in relation to time. It's probably another presentation to cover that in depth. In my opinion, time is literally the secret sauce to trading profitably. As they say, time and then price. So to align SMTs with time for the highest probability SMTs, we'll focus on the hourly time frame within this video. So essentially the SMT must be visible on the hourly time frame. When we say aligning with time, what I mean by that is one of the legs that forms the SMT aligns with on the hourly time frame either a session open or the first hourly candle open of a new 4-hour candle. So this is very important. You'll notice if this is not the case, very commonly the SMT will get hunted before any major decent moves, hence you want to avoid and wait for a proper time aligned SMT. So in these tables I've summarised the key session open and close times and the 4-hour candle open times aligned with UTC -5 New York time, statuses of the 12th of Feb 2026, so note these will change with daylight savings, but these are the key times on the early time frame that you want to see an SMT form on at least one of the legs that makes the SMT. So the next topic, forming the correct narrative, situations to look for SMT. So SMTs occur all the time. It's important to be looking for them at the right areas and at the right times. Remember, they are a confluence only and must be applied in context of a trading model. You want to be looking for them only at valid points of interest for a potential continuation or reversal on hourly plus time frame, such as hourly time frame fair value gaps or range OTE levels, or after sweeping a swing high, swing low. So the SMT will be one of the many confluences to look for to confirm the level or point of interest is going to be respected. Approach used to assist with detection. So we're only looking for SMTs to validate a point of interest we're interested in, and we know specific hourly candles will create the SMT. We can mark these up on our charts and trading view and set alerts across the correlated assets for both the key areas we are watching and the low of the time aligned hourly candle that we are anticipating an SMT may form on. As can be seen in this example, prices engaged at an hourly range OTE level. An SMT has formed versus XAUEUR with the Asia open low. So what you can do is set an alert on the OTA. So once that gets hit, you get an alert telling you to pay attention to the chart, and then you get another alert when the SMT forms. So once you've seen that happen, you can drop down to the lower time frame, look for further validation to take the entry. So here we have an example of what can be defined as a valid SMT setup. So price is rejected from a high time frame point of interest, and we've got a strong displacement time aligned SMR that has formed, so we are expecting price to dribble back up to a point of interest and then displace lower again. So here we can see that it is retraced back to the OTA level. Tokyo session has closed, and then the next hourly candle has swept that high, forming an SMT with the Tokyo open candle, making an SMT rejection from the point of interest. So we can then drop down to the lower time frames and look for further confluences to take the short entry. So here we have an example of what can be defined as an invalid or fake SMT. So price has rejected a valid point of interest, an hour fair value gap. There is an SMT that has formed, but the issue with this SMT is it's not time aligned, so it will never be a low that holds. Generally speaking, price will take out the next level of liquidity, which is the swing high in this case, and it will retrace and hunt this SMT that's not time aligned and then continue on its merry way. And that concludes this lecture. Thanks for watching.